Well, beginning with our most important story today, in what can come as good news for borrowers. For the third time in a row, Indian Central Bank RBI's Monetary Policy Committee has cut interest rates by 25 basis points or 0.25%. If passed on by the banks, rate reduction is expected to bring down EMIs on home and auto loans. It will also help reduce debt payment for corporates. At the end of three-day meeting, RBI Governor Shaktikant Das also announced a second bi-monthly monetary policy statement for 2019 and 20. RBI has also projected an upward bias in food inflation in the near term due to rising prices of food items. Indian economy is projected to grow at a rate of 7% in current fiscal, against 7.2% expected earlier. Also, to promote digital transactions, RBI has decided to waive off RTGS and NEFT charges.
The decision has been to reduce the repo rate by 25 basis points and also to change the stance of monetary policy from neutral to accommodative. The MPC also revised the projection of GDP growth for 1920 to 7% in the range of 6.4 to 6.7% for H1 and 7.2 to 7.5% for H2 of 2019-20.
But RBI has also put forward concerns advanced and emerging markets that are facing from global trade wars. The governor further added that financial markets have lost momentum it got during period of March and April. This is due to trade tensions.
The MPC noted that global economic activity has not been able to sustain the improved performance seen in the first quarter of the calendar 2019 in the face of deepening slowdown in trade and manufacturing, which has impacted advanced and emerging market economies alike. Financial markets have been unsettled by the acrimonious US-China trade tensions. Crude oil prices remain volatile, reflecting evolving demand-supply conditions and geopolitical concerns. Most emerging market economy currencies have depreciated against the US dollar.
And we are joined by my colleague Pragya Jha. She is outside RBI in Mumbai. Pragya, very good evening to you. First of all, along with that, RBI today also brought down the projected growth for Indian economy to 7% from 7.2% for the current financial year. How big is that a concern for the economy?
Sumit, this is a huge concern immediately after the Modi government comes to power, that is Modi 2.0, and just before the new finance minister Nirmala Sitharaman presents her budget in the next month, that is the July or 5th. Now, before this, the challenge here, of course, is that we are seeing that there is a third consecutive repo rate cut of 25 basis points. Now, this is definitely going to give out some momentum in the market. It's definitely going to help people, in their loans. Personal loans are going to get cheaper, home loans are going to get cheaper. Other than that, the concern for economists is also the lack of liquidity in the economy, and that is not showing up really well. In fact, the governor also going out to say that there are a number of international factors, a number of global factors, in fact, that have attributed to the kind of we're seeing that the kind of lowering of the growth rate from the projected 7.2% in the last monetary policy committee review to 7% for the coming FY 19-20 is another worry.
Also, Pragya, today government has waived off the charges on RTGS and NEFT. Also, ATM charges, there was discussion on that. So bring us up to date with these overall charge waive-offs.
Sumit, definitely this is, good news for the ultimate customer, that is the ordinary man, that is you and me. Now, this is post the monetary policy review that Shaktikant Das, the governor of Apex Bank, the Reserve Bank of India, had also made an announcement that there is definitely going to be no charges on the RTGS and the NEFT. Now, these are the modes, electronic modes of money transfer that are used for, in fact, putting out large sums of money from one account to the other. So the governor has gone on to say the RBI has taken this step forward, that the amount that would be charged, that is from rupees 50 onwards for a bigger amount to rupees 5, will not be further charged to any of the customers, any of those who hold accounts or would be willing to transfer money of that kind. Now this is only to give some more impetus to digital transactions is what we understand. Later on, we've also learned that a panel will be set up by the RBI to look keenly into the withdrawals, that is the ATM withdrawals that take place, because there is already a bar on withdrawals. We see that if more than 3 withdrawals take place in a month, there's a certain charge that comes to it. So that will also be reviewed. This again is going to be a very popular move if such transactions will be free of cost.
One last question before I let you go, Pragya. Overall, if you talk about, the banks have been very reluctant to pass on this rate cut many a times. This time, how likely it will be that the banks will pass on this rate cut? But we heard Shaktikanta Das saying that they will talk to banks. How likely is it this time that banks will pass on this cut to customers?
That's right, Sumit. Now, this has been a concern. Now, banks need to really pass on this to clients, finally to the customers, the real customers being you, me and the common man here. So until and unless they're passed on to us, the economy would really not fare that well. Also, liquidity is an issue for the banks. NPA is becoming an issue because NPAs keep piling up, and that's when the financial health of a bank really goes down. So this has been a constant urge that this kind of repo rate that we see in the 25 basis repo rate should really translate into lowering of interest rate on EMIs for the common man, and that's how it's going to really give that kind of momentum in the economy.
Thank you, Pragya, for getting us all these details on this important developing story.